Good morning. We'll begin with the preparation of final accounts of which one? Sole trader. We know the objective of the financial accountant itself. We had seen in the first class. What is the purpose of the financial accountant? Okay. We had seen the branches of accounting, recording the transaction, journal, ledger, trial balance, and all. In the process, we do BRS, rectification of errors, and other things. We prepare P&L account to show which one? Financial results, and balance sheet to find out which one? Financial position, like that. So this is what we are going to do in the today's class. One is for profit oriented organization, another one is for which one? Non-profit organizations. Okay. What do you mean by profit oriented organization? We run business for charity or profit? Profit. Okay. What kind of business? It can be a manufacturing business, it can be a trading business, or it can be rendering services. Okay. What do you mean by manufacturing business? What do you mean by manufacturing business? Clear. You manufacture some goods and deliver the goods to the customers. So manufacturers prepare three accounts. Manufacturers prepare three accounts. One is a manufacturing account. Second is a trading P&L account. Second is which one? Trading account. Then third one is P&L account. Manufacturing account, trading account, and which account? P&L account. The purpose of manufacturing account is to find out the cost of goods manufactured. To find out which one? Cost of goods manufactured. For example, let's assume you are manufacturing this plastic chair, or you are manufacturing tube lights or electronic equipments or laptops or desktops, anything, furnitures, etc. Clear? So, what is your objective of preparing manufacturing account? Is it to find out profit or loss? No, we want to find out which one? Cost of production. Opening work in progress means the goods which are there in the production, that is factory, semi-finished goods. Raw material consumed in the current year. Raw material consumed means that opening stock plus purchases minus closing stock. Then any direct labor engaged in production. Any direct expenses like carriage inwards or designing charges, manufacturing charges, royalties paid, etc. Any factory expenses you charge, and eliminate closing WIP. In ledger, when you debit something, you include an expense. When you credit something, you are eliminating from expenses. Why do we credit WIP? Because this is not manufactured this year. This will be manufactured in which year? Next year. Okay. Opening WIP is finished this year, but closing WIP will be finished in the next year. That's why we eliminate. The balancing for will be cost of finished goods. The balancing for will be nothing but what? Cost of finished goods. So charge opening WIP, the raw material consumed, any expenses, direct labor is nothing but wages paid, direct expenses incurred, charge the factory overheads, then eliminate the closing WIP, you will get the cost of finished goods transferred to which account? Trading account. Go to the illustration 1. Opening stock, what they have given? Raw material, WIP they have given, purchase of raw material they have given, wages, rent, closing stock of raw material is given, closing WIP is given, salary to factory manager is given, depreciation on machinery is given. So what will be debited? Opening WIP. What is opening WIP? 6,000. How to work out raw material consumed? Opening stock of raw material plus purchase of raw material minus closing stock of raw material. Opening stock plus purchases minus closing stock will give us what? This raw material consumed. We need not work all these things, okay? Factory wages, factory rent, salary of manager, depreciation on machine, all these are related to production, you charge them. Okay, then by closing WIP, eliminate the closing WIP, you will get the cost of goods transferred. It will go to which account? Trading account. It will go to which account? Trading account. So manufacturers prepare the first account, which account? Manufacturing account, to find out cost of goods manufactured. Cost of goods manufactured is 5,22,000. Instead of preparing an account, if you prepare a statement, add up all these things, 5,29,000. In this 7,000 we read to finish. So balance is finished. That is goods which are finished, manufactured. Cost of goods manufactured, we transfer to which account? Trading account. Wait, in the manufacturing account, raw material is adjusted, WIP is adjusted, but not finished goods. Finished goods will be there in which account? Trading account. Opening stock, this cost of goods manufactured, closing stock of finished goods That will be recorded in which account? Trading account. Okay. So the purpose is to find out which one? The cost of goods manufactured and transferred to which account? Trading account. Then manufacturers prepare which account? Trading account, where opening stock of finished goods, purchases, it can be if it is for a trader. If it is for a trader, for a manufacturer, this one. Cost of goods manufactured will be transferred to which account? Trading account. Okay, நீங்க trader you will put to purchase of finished goods. Manufacturer first already you would have prepared which account? Manufacturing account. From that you transfer to trading account that particular thing, minus purchase returns, any wages, sales minus returns and closing stock of finished goods. Then gross profit will be transferred to which account? P&L account. See, certain things, we should not solve. We should just see. Opening stock will be debited, purchase will be debited, carriage wages inwards will be debited, wages will be debited, freight will be debited, sales minus returns, purchases minus returns outwards, royalty on production and gas and fuel are direct expenses. Stock will be valued at cost or market price, whichever is less. Cost or market price, whichever is less. Stock valued 10,000 destroyed by fire. It's an abnormal loss. It's an abnormal loss, and insurance claim will come in P&L. So goods purchased 6,000, still lying in transit, not at all recorded in books. You will include in purchases. You will include in purchases. Goods taken by the proprietor for personal use. Drawings will eliminate from purchases. Will eliminate from purchases. Outstanding wages you will add it to wages. Freight paid in advance you will eliminate. You will eliminate because that's an expense that belongs to which year? Next year. If you look at opening stock, purchases minus returns minus goods taken by proprietor, goods in transit will come. Wages plus outstanding wages. Carriage inwards will come. Freight minus paid in advance. Royalty on production, gas and fuel will come. Sales minus returns will come. Closing stock minus stock destroyed by fire. Include the goods in transit also. We purchased the goods, but we are yet to get the delivery of the goods. So total 36,000 will come. Closing stock, stock destroyed, okay, and goods in transit, totally 36,000 will come. Here we'll have a small confusion on this abnormal loss. Let us learn that. Abnormal loss. Abnormal loss can happen because of accident or because of fire, lost, theft. All those things we call it as which one? Abnormal loss. Abnormal loss is first recognized in the trading account. Abnormal loss account data to trading account. Abnormal loss account data to trading account. Actually, it's a mistake பண்ணிருக்காங்க. இந்த stock code add பண்ணக்கூடாது. Actually, stock code they should not add it. They should put by abnormal loss separately. They should put by abnormal loss separately. Closing stock will be 20,000 plus 6,000. 26,000 now. Closing stock should be 20,000 plus. Now goods destroy actually every stock add பண்ண முடியும். Goods is destroyed இல்லையா? Okay, they add with the stock. So closing stock will be 20,000. Purchased goods not delivered 6,000. 26,000 now. Abnormal loss we will credit separately in the trading account. Then in this example, what is abnormal loss? 10,000 abnormal loss. Okay, we will charge the abnormal loss in profit and loss account. We will charge the abnormal loss in which account? Okay. Profit and loss account. What is abnormal loss? 10,000 abnormal loss. But we have an insurance claim. Insurance claims account data are how much? 6,000. Net loss, how much will be charged in P&L? 4,000 will be charged in P&L. Okay. So first abnormal loss is recognized in which account? Trading account. Subsequently, after adjusting the insurance claim, we will charge it in which account? P&L. Okay. This insurance claim. How much insurance claim? 6,000 we adjust. Balance we will charge it in which account? Balance we will charge it in which account? P&L account. Sometimes they ask us a separate question. Sometimes, what is the journal entry for abnormal loss? Abnormal loss account data to trading account. Okay, they may give this adjustment. How much of loss will be debited to P&L account? How much of loss will be debited to P&L account in this case? 4,000 can be debited to P&L account. This is which account? Trading account. Then we prepare P&L account where we record all the other incomes and all the other indirect expenses. All the other incomes and which one? Indirect expenses. All the other incomes and we charge all the indirect expenses, we get the balance. What do you mean by all the other income? Anything that is not related to your main business activity. Interest received, commission received, profit on sale of asset, rent received. All these are not your main business income. Then all indirect expenses other than related to trading account, we charge it in P&L account. Then the balance we transfer to which account? Capital account. They would have given, okay, which of the following items will come in trading P&L account? Wages, depreciation of the office car, repairs to machinery, purchase minus returns or sales minus returns, purchase, trading account, opening stock of finished goods, commission paid, P&L account, travel and conveyance, P&L, audit fees, P&L, freight outwards, carriage outwards, P&L account, provision of our outstanding rent, P&L account, discount earned, P&L account, printing and stationery, P&L account, salary to office staff, power and fuel connected to your keeping of material, manufacturing of material, that will come in trading account. Maintenance of office building, P&L. Closing stock of WIP, manufacturing account. It will come in manufacturing account, not in trading P&L account. Interest received, telephone charges, insurance, carriage out in P&L. Carriage inwards, trading account. Bad debts, P&L account. Returns inwards or sales returns, trading account. Depreciation on delivery by P&L account. Sales will come in which account? Trading account. They would have given the solution also. You can just go through. Okay. Here they ask you to prepare which account? P&L account. Gross profit we will credit. Rent with outstanding rent. For 11 months if it is 22,000. For 11 months if it is 22,000. 1 month it will be 2,000. 22,000 by 11 quarter 2,000. So 1 month rent you have to add. Outstanding rent you have to add. Salaries 10,000 given, outstanding salary we will add. Commission we will credit to P&L account. Insurance we will debit after eliminating which one? Prepaid insurance. Interest 6,000 we will credit. We will add accrued interest. We will add which one? Accrued interest. Provision bad debts are given. Provision for bad debts we will learn separately also. This is opening balance. This is opening balance. They ask you to provide a further bad debt of 2,000 and make a provision for bad debts of how much? 5% on debtors. So 40,000 minus 2,000, on that they ask you to create a provision of 5% on debtors. We have to charge it in P&L account. Closing balance minus opening balance we have to adjust in P&L account. Discount received we will credit to P&L account. Plant and machinery value is given. On this we will charge which one? Depreciation. Commission received in advance. Commission received in advance. Now, what is the commission credit? 12,000 minus 2,000. We will charge it in P&L account. Now, we have to learn about this provision for bad debts and bad debts separately before we proceed with the questions or whatever. Start. I request you to take it up. This is a new learning for us because surely based on this, they may ask a question. Take up this. Three questions are possible from this. Take up this, please. Take it up along with me. It's a very lengthy question. They will not ask this much. Okay, but let us be prepared. They ask you how much of charge bad debts will be charged in P&L account, provision for bad debts in P&L account, debtors for balance sheet, debtors balance for balance sheet, discount allowed debited to P&L account, provision for discount in what? P&L account. First, let us work out debtors. What is the debtors given in trial balance? 5 lakhs. Less. There are two bad debts given. One is already given in the trial balance. See, when an item will come in the trial balance, should have passed journal, posted in ledger, and the ledger should have a balance. Only then it will come in what? Trial balance. This is already recorded. The past journal entry, bad debts account data to debtors. Bad debts account data to debtors. If already something is recorded, means this would have been already adjusted with debtors balance. Okay. Adjustment, further bad debts identified. This is not coming in the trial balance. This 30,000 is not coming in the trial balance. For this, we have to adjust. We call it as new bad debts or additional bad debts. Bad debts yet to be adjusted. Yet to be adjusted how much? 30,000. This will give us gross debtors balance. Which one you will provide first? Bad debts you will provide first or discount you will provide first? Eliminate bad customers. Provision for bad debts. At the rate of 10% they ask you to maintain means 47,000. This is the closing provision required. Then this will give us good debtors. That means you eliminate the bad customers, then you get which one? Good debtors. On this provision for which one? Discount at the rate of how much percentage? 5%. On this 5%. Okay, so if you eliminate that, net debtors in which one? Balance sheet will come. 4,23,000 minus this will give you net debtors for balance sheet. This will give us which one? Net debtors for balance sheet. So we have answered one question. Which one? Debtors balance for the balance sheet we answered. Next, in the profit and loss account, two bad debts. Bad debts, how much already bad debts are there? 2 lakhs. Plus now 30,000. How much? 2,30,000 total bad debts. Provision for bad debts. See, what is the difference between bad debts and provision for bad debts? Bad debt is an actual loss. 20,000 already lost, now 30,000 lost. What is the total loss? 2,30,000. Provision is an estimated loss. Provision is an estimated loss. What is the estimated loss at the end of the year? We have to keep 47,000 minus, already we are having a provision of 20,000. So net addition, how much you have to charge? 27,000 you have to charge. I repeat, what is the provision required? It is like you have to keep 47, it's not amount spent. It is like a provision you have to keep in your purse like 47,000 rupees. Already you are having in your purse 20,000 rupees. How much you have to add in your purse? 27,000. That's it. So discount allowed how much? 1,15,000, 50,000 given in the trial balance. To provision for discount. Provision for discount. What is the balance required? 21,150 required. 21,150 required. Already we made a provision of 15,000. Means how much is required? 6,150 required. Okay. So this is how we will charge it in which account? P&L. Take it up. In this, not everything may be tested. Okay, bad debts and provision for bad debts can be tested, or discount and provision for discount can be tested. Okay, you will have a doubt. Sir, if closing balance is only, instead of 47,000, if it is 17,000 only, what to do? We are having already a balance of, but provision required only 17,000 என்ன பண்றது? We will credit. Surplus we will credit. Inge we require 47,000. Already only 20,000 is there, so we charge 27,000. Suppose inge 17,000 தான் required என்ன பண்ணுவீங்க? We require only 17,000 provision. Already 20,000 இருக்குன்னா, the 3,000 we'll take it like a surplus. We'll credit by provision for bad debt surplus 3,000 like that we will credit. Suppose in the question one more adjustment கொடுத்திருக்கான்னு வச்சுக்கோங்க. Suppose if they would have given bad debts recovered, they would have given which one? Bad debts recovered. Credit side ஒரு 25,000 கொடுத்திருக்காங்க. What will you do with this? Will you adjust with debtors balance? No. Bad debts recovered will be credited to which account? P&L account by bad debts recovered. How much? 25,000. It will not be adjusted with any of the debtors balance or any of the bad debts or provision for bad debts. Bad debts written off in the past, if it is recovered now, that will be taken as an income. Journal entry itself, cash account debtor to bad debts recovered account. Cash account debtor to bad debts recovered account. And the bad debts recovered is an income for us. We will credit to which account? P&L. Will you adjust with bad debts or provision for bad debts? No. Take up this. If there is any doubt, please ask. Live online friends, if there is any particular doubt, you can unmute and ask. Live online friends, எல்லாரும் doubt இருக்குங்களா? So please copy this. We will continue. Copy பண்ணிட்டீங்களா அது போதா? Next. The next area to understand is, listen, the next area to understand is how to find out commission to manager. Commission to managers. For example, you are appointing a manager to, of course, take care of the business. They are paid a commission. They are paid a commission. Normally, the commission will be paid to the general manager based on the net profit. Listen, let's assume net profit comes to 22 lakhs. Net profit comes to how much? 22 lakhs. Commission, they have given 10% of net profit. What will be the commission? 22 lakhs into 10%. How much it will be? 2,20,000. Suppose if they give you, in the exam question, commission 10% of net profit after charging commission. So what to do? If it is directly 10% of net profit, we apply 22 lakhs into 10%, 2,20,000. If they tell you commission 10% after charging commission, for example, net profit before charging commission இருக்கும். Commission less பண்ணா net profit after charging commission will come. They tell you if this is 100, this is 10. What it will be 10%? What it will be 10%? 10 by 100. Okay. Commission is given as a percentage of net profit after charging commission. Net profit before charging commission or amount இருக்கு, but commission is given as a percentage of net profit after charging what? Commission. Wait பண்ணுங்க. Net profit after charging commission 100 na, if commission is 10 rupees, what would have been the net profit before charging commission? 100 rupees should be the net profit after charging commission. Commission 10 rupees. Before charging commission, 110. 110. That is what is given. That is what is given as 22 lakhs. Upon 10 euro. That is why we will put, maybe you would have come across such questions. 22 lakhs into 10 by 110. Clear? If 22 lakhs is 110, what is 10 and the I repeat. Here, the commission percentage is given as a percentage of which one? Net profit after charging commission. Commission 10 ரூபாய், net profit after commission 100 ரூபாய்னா, அப்ப before charging commission எவ்வளவு இருந்திருக்கும்? Before charging commission எவ்வளவு இருந்திருக்கும்? 110 இருந்திருக்கும். And the 110 na 22 lakhs. The net profit is given. If 110 is 22 lakhs, what is 10? You will get how much? 2 lakhs. Take on this. This is tested in the exam. Okay. Not the first one. The second one is tested in the exam. Suppose if they tell you 5% commission after charging commission என்ன பண்ணிருப்பீங்க? 5% after charging commission என்ன பண்ணிருப்பீங்க? 5 by 105. Okay, so this model question is repeatedly tested in the exam. Please take it. Now, how to work out the commission for this example? 4,20,000 into 5 by 105. 20,000 number. They can ask you this question. Do you understand why do we put 5 by 105, 10 by 110? Clear? Net profit given is before charging commission, but relationship is given, percentage is given after charging commission. 100 is not an assumption. 10% naale, what is the meaning? Percentage is expressed in terms of 100. And the deciles, percentiles, maths la paathirpeenga. Deciles 1 in 10, 1 by 10 and the percentiles 1 by 100, expressed in terms of 100. So percentage is always given in terms of 100. So 100 rupees net profit na, 10 rupees commission. Before charging commission, it would have been 110. 110 is 22 lakhs now. What is 10? 105 is 4 lakh 20 now. What is 5? The trial balance is given. Building order cost கொடுத்திருக்காங்க, plant and machinery order cost கொடுத்திருக்காங்க, provision for depreciation on building and plant and machinery is given. Provide depreciation 10% on cost of building and 20% on WDV of plant and machinery. They can ask you calculate depreciation for the current year and balance of asset for balance sheet. How to provide depreciation? Building போடும்போது என்ன சொல்லிருக்கான், 10% on cost. So 5 lakhs into 10%. 5 lakhs into 10%. How much? 50,000. On plant and machinery, they ask you to provide based on WDV. WDV means cost minus accumulated depreciation. Cost is how much? 5 lakhs. What is accumulated depreciation? 2 lakhs. What is the WDV? 4 lakhs. Into எவ்வளவு percentage? 20%. Na? How much? 80,000. Building cost 5 lakhs into 10%. Plant and machinery cost is 6 lakhs. Provision for depreciation means accumulated depreciation. 2 lakhs already charged. What is WDV? 4 lakhs into 20%, 80,000. So this is depreciation. For balance sheet, how much you will show as an asset? Building 5 lakhs minus already 70,000 is there, minus 50,000. 5 lakhs is the cost of the asset minus accumulated depreciation at the beginning minus current year depreciation will come in the balance sheet. For plant and machinery, 6 lakhs minus already 2 lakhs is there, minus 80,000. So this will come in balance sheet. So sometimes they ask you questions based on this. Take up this. So this is a depreciation to be charged in P&L account. 1,30,000 to be debited in which account? Profit and loss account. And the next one is for balance sheet. For balance sheet, this much will be shown. Any doubt in this live online? கேளுங்க.
இது மட்டும் இன்னொரு வாட்டி ஒரே தடவை மட்டும் ரிப்பீட் பண்றீங்களா சார்?
டெப்ரிசியேஷனா இல்ல
டெப்ரிசியேஷன்.
பில்டிங்கோட டெப்ரிசியேஷன் என்ன கொடுத்திருக்கோம்? 10% on cost. 10% on cost. 10% on cost na 5 lakhல 10%. 50,000 is the current year depreciation. WDV na written down value. What do you mean by written down value? Cost minus accumulated depreciation will give us written down value. So 6 lakhs minus 2 lakh, 4 lakh the WDV. 4 lakh into 20%, 80,000. So 1,30,000 we'll debit in P&L. Okay. Balance sheet போடும்போது value of the asset minus all depreciation will come in the balance sheet. 6 lakhs minus already 2 lakhs, now 80,000. Balance 3,20,000 will come. This is for balance sheet. Okay.
Yes, sir.
Okay, we prepare a trading P&L account and we prepare a balance sheet. While preparing the trading P&L account, you must remember expenses should be recorded on accrual basis. Expenses and incomes should be recorded on what basis? Accrual basis. Accrual basis means ensure that you are recording income of the current year and match the expense of the current year. For that, what will you do? No need to copy. Listen, expenses paid for the year, you will do add outstanding expenses at the end of the year. Why? Because it belongs to which year? Current year. Less outstanding at the beginning of the year. Why? Because it belongs to which year? Next year. It belongs to next year, you eliminate it. Then add prepaid at the beginning of the year. Why? Because it is paid in last year. For which year? Current year. Less prepaid at the end of the year. Why? Because it is paid for which year? It is paid for next year. You will get expenses for which account? P&L account. This is called as accrued expenses for the P&L account. Don't take expenses paid, add outstanding at the end, yeah? That belongs to which year? Current year. Minus outstanding at the beginning. Why? It belongs to which year? Last year. Add prepaid at the beginning of the year. Why? It belongs to which year? Current year. Minus prepaid at the end of the year. It belongs to which year? Next year you eliminate. This will be charged in which account? P&L account. Same way, incomes also. No need to copy this. Just to recollect. Incomes collected. Add, we call it as accrued at the end of the year. Less accrued at the beginning of the year. Why? Because it belongs to which year? Last year. Add received in advance at the beginning of the year. At the beginning of the year, we received in advance for which year? Current year. Last year itself, we got it for current year. Less received in advance at the end of the year. Why? Because it belongs to which year? Next year. Advance received at the end of the year belongs to next year. Next year. So this will come as which one? Incomes in which account? P&L account. Income to be taken to P&L account. That is called as accrual basis accounting. Only when you do accrual basis accounting, matching will come. Incomes for this year will be matched with what? Expenses for the year. So while preparing expenses and income, record on what basis? Accrual basis. And trading P&L account. Trading P&L account is prepared based on the principle of which one? Matching. Matching the incomes and expenses. In the balance sheet, of course, we are going to record assets and which one? Liabilities. What is a liability? In the expenses, what will be a liability? Outstanding expenses will be a liability. Why? Anything payable is a liability. Anything payable is a liability. Anything received in advance. Liability. Same way, asset led. Anything paid in advance. Paid in advance. Then accrued incomes. Accrued income means incomes receivable. Incomes receivable, that will be shown as which one? Assets apart from other assets and liability. Debtors, creditors, other assets and liability. Okay, this we will show it in which one? Balance sheet. Okay. Now, this is about learning for or revising for which one? Manufacturing account, trading account, P&L account, balance sheet. I need not tell you. Okay, cash balance, bank balance. Okay, your data, stock, then land and building, plant and machinery investments will come as what? Assets. Then liabilities like capital, creditors, loans will come. If expenses are payable, anything received in advance is a liability. Anything that is paid in advance, anything that is accrued but not received is an asset. That will be shown in which account? Balance sheet. That will be shown in the balance sheet. Now we'll go to the multiple choice questions. Shall we?
Yes, sir.
This question I've shared, this will also be there in your material also. The purpose of final accounts is to ascertain what is the purpose of final accounts? Profit and loss. Okay, purpose of final accounts is to ascertain which one? Profit and loss. What is the next one? Manager is entitled for a commission of 5% on net profit before deducting the commission. Before deducting the commission. After deducting the commission, before deducting the commission. Wait, pardon. First question answer correct. Purpose of final accounts is to
Profit or loss and financial
we
position.
want to find out P&L as well as what? We want to find out which one? Financial position. That's what we had seen. The purpose of final accounts is to find out profit or loss as well as what? Financial position. I've done an overlook mistake. Answer is D. Answer is which one? D. Then, second question, you can try to answer.
Option A.
Think. Inge, have they given after charging commission or before charging commission? After charging commission, the 5/105 apply பண்ணணும். If they would have given after charging commission, 8,400 into 5/105. Here they use the word before charging commission. So 8,400 into directly 5%, it will give us 420. If after charging commission use பண்ணிருந்தானா 5/105, answer 400 வரும். So be careful. நம்ம கிளாஸ்ல லேர்ன் பண்ணது after charging commission. Example before charging கொடுத்தானா be careful. Okay, balance in petty cash is an asset. Any cash, let it be normal cash or petty cash, is an asset. Fourth question, try to answer.
Kept in business for you longer time for earning income.
We are not going to keep it for resale. It is not for conversion into cash. It is for long-term use. Manufacturing account is prepared for which purpose? Manufacturing account is prepared. Is it to find out profit or loss? No. To find out cost of manufactured goods. To find out cost of the manufactured goods. Sixth question. The company wants to earn 20% profit on selling price. The company wants to earn 20% profit on selling price. 20% profit on selling price. 20/100 on selling price. Profit on selling price. Profit on what? Selling price. Nothing but 1/5 on selling price. 1/5 on selling price. They ask you, what is the profit required on cost? What is the profit on sales? What is the profit on sales? 20% means 20/100. Simple. If profit is 20, selling price is 100, what will be the cost?
25.
Oh, 80. Selling price minus profit will give us cost. So if you look at it, will be nothing but 20 by 80 is nothing but 1 by 4. 1 by 4 can be written as 1 by 4 can be written as how much percentage? 25%. 1/4 is nothing but a quarter, 25%. Clear? If sales is 100, profit is 20. அப்போ cost எவ்வளோ இருக்கும்? 80 இருக்கும். Clear? Selling price minus profit will give us what? Cost. See, remember on cost to on sales. When you go forward, you will add. For example, on cost they are given 10%. 10 by 100 kurta. On cost it will be on sales it will become 10 by 110. Forward போகும்போது cost plus profit sales. On cost if they give you 20%. 20 by 100 கொடுத்தாங்கன்னா nothing but 1/5 கொடுத்தாங்கன்னா on sales it will become what? 20 by 120, nothing but 1 by 6. When you go forward, add it. Okay. If they give you 25% on cost, 25 by 100 on cost கொடுத்தா 1/4 on cost, it will become what? 25 by 125. 25 by 125, nothing but 1/5 on sales. 1/5 on sales. Because when you go forward, cost plus profit will give us selling price. Add numerator and denominator. Cost plus profit will give us selling price. When you have to come reverse, for example, on cost 20% கொடுத்திருக்காங்க. 20%, nothing but 1/5 on sales கொடுத்தா on cost வரும்போது it will be 20 by 80, nothing but 20 by 80 is nothing but 1/4 is nothing but 25%. அதான் இங்க போட்டு 20 by 100 on sales, 1/5 on sales. On cost it will become 1/4, nothing but how much percentage? 20%. Let them give even, let us assume they've given 3 by 27 on sales கொடுத்தா என்ன பண்ணுவீங்க? On cost வரும்போது it will become 3 by 24. 27 minus 3. 27 is selling price. 3 rupees profit na 3 by 4, 24. It can be written as 1 by 8. 1 by 8 on sales. 3 by 20, sorry, on cost. On cost. When you go forward, add. When you come reverse, selling price minus profit is which one? Cost. 3 by 27 can be written as 1 by 9 on sales. 1 by 9 on sales can be taken as 1 by 8 on cost. Because selling, what is 1, what is 9? 1 rupee profit when you sell for 9. அப்போ cost எவ்வளோ இருக்கும்? 8 rupees இருக்கும். So ரொம்ப simple. On cost to on sales forward போனா add பண்ணுங்க. On sales to on cost வந்து reverse வர என்ன பண்ணுங்க? Minus பண்ணுங்க. Then answer is how much? 25%. At the time of preparation of final accounts, bad debts recovered will be transferred to questionல கூட பார்த்தோம். Bad debts recovered will be transferred to P&L account, credit side of P&L account. It will not be adjusted with returns. It will not be adjusted with bad debts or provision for bad debts. It will be credited to which account? P&L. It will be credited to P&L. Depreciation appearing in the trial balance. For example, they don't give adjustment. Already they have given depreciation in the trial balance itself. Depreciation, trial balance le கொடுத்துட்டாங்க. Now what is the meaning? Already they passed journal entry for depreciation. Depreciation to fixed asset. Okay. No need to adjust fixed asset. Just debit to P&L. Just debit to which account? P&L account. Adjustment la கொடுத்தாதான் என்ன பண்ணுவீங்க? Adjustment la கொடுத்தாதான் what will you do? Both A and C option கொடுத்தோம். What will be both A and C? We will debit to P&L account and reduce from asset. When depreciation is given in the adjustment. When depreciation itself is given in the trial balance, directly charge it in which account? P&L account. Trial balance they have given current year depreciation, just debit to P&L account. Adjustment la கொடுத்தா it is yet to be adjusted. Charge it in P&L account, adjust the asset in the balance sheet. Gross profit is equal to sales minus cost of goods sold. Sales minus cost of goods sold. Profit and loss account shows, is it on a particular date or for a period? Is it for a particular date or for a period? Please remember, profit and loss account is always prepared for a period, for the year ending, 12 months. Balance sheet as on a particular date. Balance sheet as on a particular date. It shows financial results for a period, not on a date. Okay, for a particular period, April to March, January to December. That is what P&L account shows. 11th question. Which one is not a financial statement? Which one is not a financial statement? Trial balance is not a financial statement. Trial balance is just a summary of a statement of ledger balances. Ledger balance in the we prepare a statement and check. That is not a financial statement. That is just a summary of ledger accounts. That is a summary of ledger accounts. 12 paragraph. Based on which of the following concept, share capital account is shown in the liability side of the balance sheet. Young capital liability side of the balance sheet like outcome.
Yes.
Business entity concept. Treat owner and business as separate entity. That is why capital is shown in which side? Liability side. First class leap. Closing stock appearing in the trial balance. Closing stock adjustment le koduthadan trading account liyum balance sheet liyum. Closing stock trial balance le koduthanga it will be directly taken to balance sheet. It will be directly taken to balance sheet. If closing stock is given as an adjustment now, you will record in trading account as well as in what? Balance sheet. If it is already given in the trial balance, it will go to which one? Balance sheet. Consider the following data. Identify the amount which is deducted from the data's balance. Bad debts given in trial balance. Provision for bad debts old கொடுத்திருக்காங்க. Provision bad debts new கொடுத்திருக்காங்க. Question என்னன்னா எதை வந்து டேட்டாஸ் வந்து ரெடியூஸ் பண்ணுவேன்னு கேட்டிருக்காங்க. ஒரு ப்ராப்ளம் பண்ணுவோம். எதை ரெடியூஸ் பண்றோம் பேலன்ஸ் ஷீட்ல? Adjustmentல வர bad debts, new provision for bad debts, new provision for discount record பண்ணுவோம். Old bad debts old provision for bad debts நம்ம adjust பண்ண மாட்டோம். We will adjust only additional bad debts, new provision for bad debts and discounts. இப்போ answer பண்ணுங்க. Which one will be deducted in the balance sheet? இது trial balanceல கொடுத்தது. இது வந்து provision for doubtful debts old. What is provision for doubtful debts new? Only 800 will be deducted from debtors in the balance sheet. Only 800 will be deducted from the debtors in the balance sheet. Inventory, nothing but stock. Inventory is part of current assets. Inventory is part of current assets. Okay. Insurance prepaid is shown in the asset side of balance sheet. Okay. If sales are how much? If sales are how much? 2000. GP on cost is how much? 25% கொடுத்திருக்காங்க. Then cost of goods sold will be. Let me to work out. What is the sales given? 2000. Profit on cost எவ்வளவு கொடுத்திருக்காங்க? Profit on cost how much is given? 25%. 25% is nothing but 1/4. So profit on sales will be 1/5. So less profit 1/5. 1/5 போட என்ன வரும்? 400 வரும். So cost of goods sold will be 1600. Take this up. Any doubt in it? 1/4 on cost, 1/5 on sales. Sales minus profit will give us which one? Cost. Next part. Goodwill is an intangible asset. Assets minus liability is capital. Opening stock, closing stock, purchases கொடுத்திருக்காங்க. Profit margin கொடுத்திருக்காங்க. Then sales கேட்டிருக்காங்க. So first let us work out cost of goods sold. What is cost of goods sold? Opening stock plus purchases minus closing stock. What is opening stock? 50,000. Opening stock is 50,000 plus purchases 1,90,000 minus closing stock is 40,000. Cost of goods sold is how much? 2 lakhs. Profit on sales 2 lakhs. 2 lakh 40 minus 40, 2 lakhs. So profit on sales கொடுத்திருக்காங்க. Profit on sales கொடுத்திருக்காங்க. எவ்வளவு percentage? 16.67 by 100. If you apply this, it will come to 1/6. 1/6 வரும். So what will be profit on cost? 16.67 divided by 100 போட்டா you can see 1/6 வரும் 6 times வரும். Okay, 1/6 on sales, it will be 1/5 on cost. So add profit. They ask you sales 1/5 on cost. 1/5 on cost. 1/5 on cost will be 40,000. Add panna, sales will come. What is the sales? 2,40,000. Take up this. Or other. Shall we? Average stock 12,000 கொடுத்துருக்காங்க. Closing stock 3,000 is more than the opening stock. The average stock formula எல்லாம் apply பண்ணி போடலாம். Otherwise, there's a shortcut available for this. What is average stock? 12,000 கொடுத்துருக்காங்களா? What is difference between opening stock to closing stock? Difference between opening stock and closing stock 3,000 irka. Cut the difference into 2. Okay, minus 1,500 plus 1,500. Appo plus 1,500 add panna higher value vandrum 13,500 vandrum. Minus 1,500 போட்டீங்கன்னா 10,500 vandrum. Okay, so difference pada 3,000. Which one is more than which one? Which one is more than which one? Closing stock is 3,000 more than the opening stock. Closing stock is 3,000 more than the opening stock. Higher value is the closing stock. This is opening stock. I repeat, what is the average stock given? 12,000. What is the total difference between opening stock and closing stock? 3,000. Randa cut pannunga. Minus 1,500 lower value vandrum, plus 1,500 higher value vandrum. Okay, they asked you the answer for closing stock 13,500. இல்ல சார் நான் இப்படி போடலைன்னா +1 ல பண்ண மாதிரி opening stock plus closing stock divided by 2 is equal to 12,000. X plus 3,000 divided by 2 is equal to 12,000. Solve பண்ணீங்கன்னா you will get the answer 13,500 for closing stock. That is unnecessary. Okay, shortcut. Any difference given 5,000 கொடுத்தா cut the difference 2,500 minus பண்ண lower value வரும் plus பண்ண higher value வரும். They ask you closing stock value, which is of course more than the opening stock. So answer is 13,500. Let's have the normal now work panona. You can do average stock is equal to opening stock plus which one? Closing stock divided by 2. So you'll keep like average stock 12,000 na, opening stock X na, closing stock will be X plus 3,000 divided by 2. When you solve this, you will get the value of X. You will get the value of which one? X as 10,500 over. X is opening stock. X plus 3,000. Nothing but 13,500 will be nothing but which stock? Closing stock. In the Mariam. But instead, average stock is given. Average stock is average stock how much is given? 12,000. Okay. Cut the difference into two. 3,000 total difference. Minus 1,500 opening stock plus 1,500. You will get which one? Closing stock. Dash contain closing balance of real and personal accounts. Balance sheet. This also I told you in the last class itself. Nominal accounts. Okay, personal accounts and real accounts are recorded in which one? Balance sheet. Nominal accounts are recorded in which one? P&L account. Don't forget that. So balance sheet only which will come? Personal and real accounts will come. Expenses due but it to be paid is known as outstanding expenses. Old provision for bad debts and as well 4,000. Debtors 5,000. Provision required is 10%. For 5,000 and 10% quota, 5,000 and 10% quota, 50,000 and 10% will be 5,000 minus old provision 4,000. What is extra provision required? 1,000. I repeat. What is the debtors balance? 50,000 into 10% apply panna 5,000. There is a provision required. Minus old provision, how much is there? 4,000. Additional provision to be created is how much? 1,000. Bills receivable discounted but not due. Will be shown in notes to accounts. What do you mean by bills receivable discounted? I'm having bills receivable that is discounted with the bank. It is called as contingent liability. If the acceptor is not paying, we have to pay. If the acceptor is not paying, we have to pay. So that will be shown as notes to accounts. Dash entries are passed at the end of the year. Of course, closing entries are passed at the end of the year. Assets in the books which have no real value is known as which one? Fictitious assets. Example, preliminary expenses, discount on issue of shares, debentures. All these are called as what? Fictitious assets. Why? Because they are having no physical existence, number one. No recoverable value. At the sale penny recover panna mudiyum. Normally, deferred revenue expenditures will be like fictitious assets. Various expenses accounts are closed by debiting the P&L account. Provision for doubtful account shows which balance? Provision for doubtful debts will show which balance? Our trial balance. Provision for bad debts, provision for discount. All provisions will show which balance? Credit balance. All provision show which balance? Credit balance. Loss on sale of old car is debited to P&L account. Debited to which account? P&L account. Income earned but not received are called as accrued incomes. True. In a shirt factory, cotton is a raw material. No, cloth is a raw material. Cotton is not connected with finished goods. Finished goods are shirts. Finished goods are which one? Shirts. Okay, I request you to go through this. Boring here. I request you to go through this. True or false question and which one? Match the following question at home. Okay, so final accounts in the mari questions they can test you. And of course, fill in the blanks question will be tested in the form of my MCQs. Will be tested in the form of which one? MCQs. They will give you options. You have to choose the option. Loss on sale of old car is debited to P&L account, credited to P&L account. And the many options. So this is about which one? Final accounts of which one? Sole trader. Okay. Of course, in the next session, we'll move on to which one? Final accounts of non-profit organizations. If you look at the weightage in the syllabus, these two chapters, final accounts and this one, 25% weightage is given, which means around 10 questions you will get from this. Final accounts of sole trader plus final accounts of non-profit organization. You are having how many multiple choice questions? 50. Yeah. And the 50 10 to 12 questions will come from which one? 10 to 12 questions will come from final accounts of sole trader and non-profit organization. Okay, so we'll stop here. We'll go to which one? Final accounts of which one? Non-profit organization. Okay. after the break.